Meta's last down day as a stock was all the way back in the Biden administration.
Crazy.
Couple weeks. But Meta has never been down under the Donald Trump administration. And maybe that's the point, because some suggest that Mark Zuckerberg's transformation from really a guy that wanted to keep his head down during COVID to an in-your-face CEO-based Zuck is one of the reasons that Facebook, Meta, has been on a run. Let's talk about it all and what exactly is going on with Stephen Levy. He is the editor at Wired at Large, editor at large at Wired. I just gave you like a weird new promotion. Stephen, thank you. And author of Facebook, The Inside Story, and Shira Frankel, tech reporter at the New York Times and author of An Ugly Truth, Inside Facebook's Battle for Domination. So this is a hell of a story. Stephen, I'm going to start with you because they were moving. I called it their new Coke moment. You got to be of a certain age to know what that even means. But you know what I'm talking about. They changed their name to Meta. They talked about the metaverse. You could buy, fake land with real money. That seems to have completely vanished. I don't know what the company is now. Maybe you do. And why it's suddenly red hot.
Yeah, well, there's a few reasons. One is the metaverse thing, which, people mocked. But they actually wound up coming out of that with a pretty decent growing business with, instead of big heavy headsets, which they still make, with glasses, which give you internet, the Ray-Ban glasses, which are pretty popular. But I think the biggest change in the company is they're still raking it in on social media while trying to get past all the problems they had with the content there. And that happens to align Mark Zuckerberg with the Trump administration, which for years had been urging it to, do what they call free expression, which means, basically let all misinformation flow on that. And Mark has not only embraced that, but he's embraced sort of like the manliness aspect, the manosphere thing of the Trump administration too, because he feels that he's beyond the criticism. Well, he doesn't really worry about it anymore.
And sure, and that's it. And who do you think is the real Mark Zuckerberg? Because I don't know.
Well, I think people close to Mark Zuckerberg see that the version of him who's out in the public now, showing off his interests in sports, showing off his interest in fighting, in the various sort of outfits we've seen him in. That's the real Mark Zuckerberg, and they say that's who he's always been. That in his early 20s, when he left Harvard and sort of started this company, that he was this version of himself, and that he was convinced for many years to be a quieter version, to sort of find the middle ground, to reach out to the American people, to be apologetic for mistakes his company made, and that he's now really come full circle to some of his sort of his origin story, as it was.
While the initial tremors of DeepSeek AI shook investor confidence in tech giants like Nvidia, leading figures in the tech world such as Meta Platforms' Mark Zuckerberg and Microsoft's Satya Nadella have entered the conversation, casting the positive spotlight once more on Nvidia and delivering the best news for its holders. But will Nvidia keep lose despite this, or are there silver linings amidst these storm clouds? Welcome back to Investocracy.
So I'm curious, I was going to say, Shira, about the stock. I mean, from investors' point of view, the reason why AI has been so transformative is almost this kind of, businessy thing of they get to optimize ad load, right? They can figure out the algorithms better. They can deliver better ads for you. They can command higher dollars. And yes, they're doing a lot of other things, in the works as well. But that's what it really comes down to, right?
Well, I mean, anyone out here in Silicon Valley has got to put AI into their pitch at the moment if they're trying to sell their company. We've heard Meta discuss how AI is going to solve everything for them, from removing misinformation, disinformation from the platform, helping them sort through hate speech, improving ad revenue goals. AI is the hot buzzword, but I think part of the reason that Meta specifically is doing so well right now is really Mark Zuckerberg's ability to align himself with Trump, to appear publicly with Trump, and to show the public that some of those trust concerns, some of the concerns that Meta had as a company in Washington, D.C. aren't going to exist in the Trump administration.
And by the way, we lost Stephen, hoping to get him back, but Shira, so we'll stay with you. I get that, I guess, but what I'm trying to understand is, and I know you're not a stock person, don't worry, you don't have to answer it directly, but how does that benefit the stock? The stock's up 12 sessions in a row. That's what we talk about. How does aligning with Trump further Meta's interests as a business? Maybe it has something to do with TikTok's future?
It could be. It could be that people are looking at Meta and saying, right, well, Mark Zuckerberg is close to the Trump administration. He's not going to have the same sort of antitrust concerns in Washington, D.C. He's not going to face congressional hearings and fines for some of the problems on his platform. And Trump could force TikTok to still sell. I mean, the main sort of threat to Meta as a company has been TikTok. And if that's off the table, then the growth for Meta going forward could be unprecedented.
The heart of this debate lies in the unexpected prowess of DeepSeek's AI model. Nvidia found itself under the microscope as investors pondered whether U.S. companies could now attain similar AI outcomes without their costly hardware. The narrative quickly turned serious as Nvidia shareholders, still reeling, were offered a lifeline by Meta and Microsoft. Mark Zuckerberg, the CEO of Meta Platforms, floated a counter-argument that few anticipated. He pointed out that while efficient AI models are exciting, they don't necessarily negate the need for powerful AI chips. In fact, with more advanced models, there's a golden opportunity to deploy increased computing power. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Yeah, first of all, anytime a company that you've sponsored and were essentially a seed investor in raises money from others, it's a good day. A good day for OpenAI and a good day for Microsoft and our investors. Look, our partnership continues. We'll be a tech partner to Stargate, but more importantly, our partnership with OpenAI, you talked about exclusivity. OpenAI APIs are exclusive to Azure going forward even. So nothing changes there. IP access to Microsoft continues. And in fact, because of this, there will be more IP. And so therefore we'll benefit. And we have rev share arrangements that are great. And also OpenAI committed in a very significant way to Azure consumption. And so we're very thrilled about that as well. So all up, as far as I'm concerned, this accelerates OpenAI's model work, which accelerates Microsoft's ability to go to market with those models and really grow our business.
Let me ask you this. We had one of your competitors on earlier this morning, Mark Benioff, who has been very critical of this partnership. And one of the things that he said this is a demonstration of a fissure between the two companies, that you are going to go off longer term and build your own frontier models. And that there's a disconnect of some sort between Sam Altman and Mustafa, who you hired to run your AI program. Can you speak to that?
I mean, look, I think the partnership with OpenAI to us is a critical partnership. We love it. It's working. It's created a lot of value for us. And we plan to just continue forward with it. It's true that on Azure today, there are other models. There are open source models. We have our own small language models, and we'll continue to have all of that. Because customers at the end of the day are going to demand choice there, and that's fine, and we'll make sure we support it. But having a leading model on Azure exclusively is a great advantage to us, and it's good.
Let me ask you this. So I talked to Sam Altman at DealBook just about a month and a half ago now, and he says, I don't think we're disentangling, to your point. He says, look, I will not pretend there are no misalignments or challenges. Obviously, there are some. On the whole, he said that he thinks it's tremendously positive. What are the things where there's not alignment? One of the things I noticed in one of your filings recently is you actually put OpenAI as a competitor on your list, which I thought must speak about your ambitions long term.
Yeah, I mean, more importantly, I think for us, one of the things that, in fact, Stargate is the answer. Sam wants to continue with the scaling laws to build out more compute in order for him to train more models. And we have a ROFR, so he comes to us first. If we meet those needs, then we clear it. If not, he can go to these other providers. And so therefore, I think it works out well for Sam and for us. So this was an adjustment, quite frankly, that we made in order to support both his needs, while at the same time keeping the integrity of what we wanted as the strategic value.
You were investing $80 billion already. How much money do you ultimately put into this?
So this is where, Microsoft is investing $80 billion in capital each year. And this year we're investing.
And
I'm not particularly in the details of what they're investing.
Okay. And so, but when you look at that $100 billion commitment, $500 billion potential, I don't know if you saw Elon Musk took to Twitter and said they don't have the money. The money doesn't exist, as if this is not really going to happen. What do you think of that?
Look, all I know is I'm good for my $80 billion. I am going to spend $80 billion building out Azure. Customers can count on Microsoft with OpenAI models being there everywhere in the world, serving OpenAI models and other models. That's, I think, what I know.
Similarly, Microsoft's CEO Satya Nadella chimed in, drawing on a classic economic theory, the Jevons paradox. Nadella celebrated their progress in AI efficiency, yet posited that as AI becomes more affordable and efficient, demand will naturally surge. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Continue to monitor, of course, keep you abreast of any news from the RFK hearing. We've also got to talk about the upcoming Fed decision and earnings results from 3 of the Magnificent 7 names, all coming this afternoon. Tesla, Meta, Microsoft. Steve Kovac and Julia Boorstin here with more on what investors should be watching out for. Steve, we'll start with you.
Yeah, Sarah, the dynamics of this Microsoft earnings report has just really changed in the last week or so. We found out last week with that Stargate announcement that Microsoft is no longer that exclusive cloud partner for OpenAI, and that Stargate project is really where a lot of the resources are going to go. At the same time, DeepSeek is kind of raising all these new questions about these AI capital expenditures that have been under scrutiny from investors since probably last summer, since they talked about not just Microsoft, but Google and so many others talked about the enormous amounts of money that they're planning to spend. And then today we got another wrinkle in the story with OpenAI saying that they probably suspect that some of this DeepSeek stuff was actually trained on OpenAI using the OpenAI APIs in an improper way against the policy there. So that is still being played out as well. But the numbers still remain here. The fiscal year 2025 CapEx for Microsoft, $80 billion. They are sticking with that. That's the number that they plan to spend through the end of their fiscal year in July. And then the numbers to watch for are the Azure growth. The previous quarter, Azure had grown 33%, and 12% of that came from artificial intelligence. OpenAI is a big part of that. Of course, we're going to be looking for what that number is today, and also moving forward if the growth rate will continue to accelerate, especially for AI processes. And then OpenAI, those losses that OpenAI is suffering continues to suffer, to hurt Microsoft too. They are expecting a $1.5 billion hit to income this quarter, Sarah.
Steve, appreciate that. We're going to be talking a lot today. Meantime, Meta is also set to report this afternoon with AI and DeepSeek sure to loom large. Our Julia Boorstin's here to talk about what might be important. Certainly CapEx guidance, or at least a reiteration of it, will be interesting, Julia.
That's right, Carl. AI, its costs, its payoffs, and the future of open source will be the key factors driving Meta's results and also its stock after earnings today. Now, Meta shares are up 67% in the past year and up about 8% in the past week. It's a rare mega cap tech stock that has benefited from the surprise explosion of DeepSeek. Its success is seen as validating Meta's open source approach to AI. And because Meta is seen as a key beneficiary of AI, both in terms of its ad business and also its consumer chatbot. Now, CEO Mark Zuckerberg just last week pre-announcing the company's 2025 CapEx outlook, saying it'll be $60 to $65 billion in CapEx spending as it builds its AI infrastructure. So now analysts are hopeful that DeepSeek's lower cost will eventually spell savings for Meta. JMP with a buy on the stock, saying with AI becoming more efficient, it is increasingly likely that 2025 is Meta's peak AI CapEx year as it digests its AI investments from the last few years. So the question is how Meta's AI investments are paying off this quarter. While earnings per share are projected to grow 27% from the year earlier quarter, revenue growth is expected to slow to 17% this quarter, down from 19% last quarter, and is projected to continue to slow to 14% next quarter. So we'll see whether those AI tools, plus monetization of Messenger and WhatsApp, and ads coming to Threads can rev up growth. Guys?
Despite the tempestuous waves initially stirred by DeepSeek's announcement, Nvidia's median target price remains robust, implying a notable upside from its current standing. So investors, what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.